Good evening, everybody. It's another episode of Sang Lucci TV. We are joined here with Dan Shapiro, who is the head trader over at accessatrader.com. We've actually done a pretty cool interview with him in the past. It was actually a really long one, but it was probably one of the dopest interviews that we've had with some real traders on sanglucci.com ever since we started the site. So I'm going to go ahead and drop the link for that particular video in the YouTube description, so you guys can check that out. Dan, what's going on, man? What's going on? How you doing, man?
First of all, guys, I want to thank you very much for having me on. I know I'm a little bashful at times, so you have to bear with my shyness and all. But yeah, thank you very much for having me on. Maybe not the greatest day in the world for psychology and market perspective, but
of course, and we're gonna get into that. We're gonna get into that in a second. But first, for everybody who is unaware of who you are and how long you've been in the game, can you give everybody a sort of quick breakdown of how you started out as a trader and to you running this service that you have now?
Yeah, forget about Access a Trader. Access a Trader is another byproduct of
sure.
a whole bunch of crap that I have going on. Really quickly, I started out in the end of 1998, 1999 in generic trading with Meyerhoff and Ron Shear and every big heavy-duty guy who ever came through those walls. We probably had the biggest group in generic for about a year and a half before Schoenfeld and all these other guys came on the scene. Just tremendous group of guys. Everybody branched out to be fund managers, this, that, the other thing. I was under Meyer and Ron, and even Google Meyerhoff, and we actually did a piece with Pete for an interview with Meyer, and the guy made hundreds of millions of dollars. So, and long story short, we're here, right? So. If you guys want more information about me, again, Lucci will tweet out that piece we did, the original video we did. It was like an hour. It was only supposed to be half an hour. It turned into an hour, and make a long story short, it could have been 5 hours. We had a lot of talk.
So yeah, Sang Lucci, as well as Dan, we're looking to come together for a couple of live events as well. So stay tuned for some information on that as well. But let's go ahead and get into this, man. So there's a lot of current events that are going on right now. So what I want to do is shoot the shit here real quick with Dan and get his opinion on a couple of things that are happening right now, and then trading overall. Sort of the world of trading, how it has sort of adapted to, and what's working today and what sort of stopped working completely. So first, let's run through these current events here, man. Let's talk about this NYSE halt today. So we had the NYSE halt for what, like 6 hours today, from 10 to, I think they reopened us at like 3 p.m. Man, what do you think about this?
Listen, I'll be honest with you. I think, and I've said this for years. Okay. The New York Stock Exchange, okay, I've stopped trading listed securities a long time ago. Okay, right. If anybody knows anything about the New York Stock Exchange, the specialist is there to run and keep a very orderly and fair market, right? That's his only job. The problem with that, right, job is he sees everybody's order flow. So if Morgan Stanley wants to unload 2 billion shares of IBM, he knows about it, okay?
Right.
If there's a buyer, he knows about it. So the fact that IBM is breaking out, it doesn't matter because you have an extra set of hands. If you get about the high frequency, all that is nonsense. You have one guy controlling the book. So when they halt trading for, what was it, 5-6 hours?
5-6 hours today, yeah.
So the theory was, well, there's nobody around to support the stock market to begin with. Everybody's in the Hamptons, everybody's in, God knows what. Okay.
Indeed.
Nobody's there to support the market. You have oil going to crap, you got grease going to crap, you got silver going to crap, you got a perfect storm of everything going to crap. Yep. Okay, who's going to support this market? And people were thinking, well, if all these securities are halted, then there's nobody around, and all these ECNs will get hit, and the market will be down 500 points. That didn't happen. I don't know why it didn't happen. It doesn't matter to me why it didn't happen. It just didn't happen. But again, it shows the power or the lack of power of the structure in the quote-unquote financial system. And again, I don't want to go back to the whole flash crash. I don't even remember it. All I do remember is I was sitting in a cent, and Google was like $10. So I bought 1,000 shares of Google. Next thing I know, on my sheets I had a $350,000 profit. The only problem is trade.
Yep. They broke that shit. They broke that shit real quick, and I think this alludes to another thing that we were talking about before. We started the broadcast here was the liquidity today, particularly in the markets, on a lot of somewhat heavy sort of volume stocks that usually trade 3-4 million shares a day. They really can't find liquidity on. But we'll get to that in a second. I want your opinion too on China as well. So China last night here was down 10%. They're saying at least 1,400 of the 2,700 companies traded in China have pulled their shares from the markets, just to keep from this whole bubble bursting and all that kind of stuff. What do you think about China, and what do you think about...
Let's back up for a second. So,
sure.
December of 2014, China was at 2,500. Okay?
2,500, yep.
Okay, 3 weeks ago, or 2 weeks ago, we were at 5,100.
5,100, that's right.
Laws of gravity says whatever goes up must go down. So I'm not really, it is what it is. I'm not the expert in all this China and the whole macro universe. I believe in process. I believe in the stock market, the way it's structured, and I believe there is an orderly, fair market. I know I'm one of the few minority in that. But I think what's more important is let's go back 24 hours. That we had, and again, for all you technical analysts out there, we have,
I shit on the technical analysts all day on Twitter, so I'll throw that out there too. But you finish your spiel.
I think we had one of the most bullish closes I've ever seen in a long, long time.
It was so bullish, dude.
It was so damn bullish that and again, you don't need to be a professional chart reader. I'm not a professional chart reader. I'm okay. I know what the hell I'm talking about. If you see a hammer, right? Everyone's talking about the hammer time, the shiny pants, hammer. Again, for all you kids who were born, before 1990 and don't know who MC Hammer is, you really should not even be listening to this because everything I'm saying is irrelevant. But if you believe in the power of the hammer, right? And if you believe the power of the hammer off the mother load of moving averages, which is the 200-day moving average, right, you could have bet your left arm that we were gapping tremendously.
Yeah, absolutely.
Tremendous today.
Absolutely.
The only question was it going to be 200 points, 300 points. The unicorn was out and about. It all matters how much. Next thing I know, I see, as we talked about a second ago, last night, I put on my Twitter, I see Jesus tweeting, there's now 25 handles. What planet is this from? So
my God.
Again, just to kind of quickly rewind, I had buddies of mine, and I tweeted out that 2056 level, once they violated it, went down. That first bounce, right back to the 205, 205.20 level, a friend of mine goes, I'm all in on this bounce. I'm all in. Not a little bit. I'm all in. With 12 hands, 2 feet, 3 eyes, I'm all in on this bounce. Yada, yada, we go to 208. Yep. And then we got back down to 204. So I think, look, Greece by itself is irrelevant. We've been talking about Greece now for 3-4 years. Okay, look, I got a lot of Greek friends. Shout out to all the people on Steinway Avenue in Queens.
Is that in Astoria? Is that Astoria?
Queens. Astoria.
No doubt.
Shout out to you guys. Mykonos is happening in August. Everything is phenomenal. Listen, phenomenal place. Okay, I've never been there, but I have a lot of Greek friends. Phenomenal place. But the irrelevance by Greece by itself is irrelevant. Let's be honest here. The problem is it's not Greece. It's what the domino effect is. Because we've been talking about Greece for 3 years.
Exactly.
It's the domino effect. It's Portugal. It's Italy. It's Spain. What happens next? The market doesn't like uncertainty. The market doesn't like indecision. And that's what we're seeing right now. We're seeing a lot of indecision right now. We're seeing a lot of theories out there. What happened? What could happen? Look, Greece is going to be soft. Okay, China is unwinding because China ran up from 2,500 to 5,100. Eventually, things go down. It's like eventually people talk G-Pro. G-Pro's flying, G-Pro's flying, G-Pro's flying. Hello, there was 1,000 G-Pros before that. There was Taser, there was Boom, there was DJL. There was 1,000 Taser before that. So there will be, other companies that will replace. So all the Chinese market's doing is doing the same thing because, again, Wall Street has a very organic, lethargic, boring way. Okay, and all it does is rinse, repeat, rinse, repeat. So China, again, I don't think is that big of a deal. Is there exposure to U.S. companies? They're talking about Apple exposure. Look, it is what it is. Again, I can't solve the problem of the macro universe. Okay,
of course.
The most important part of our job, again, unless you're running a fund, and again, that's a whole different story. But unless you're running a fund and you have a 5 to 10 year time horizon, Your objective is price action. What's working? What's not working? How is my risk-defined plan representing this market? And again, the long side is compromised. The short side is compromised. We know this, okay?
Right.
We can't be, we can't be so arrogant to think the one trade that we put on
is going to be that trade. It's going to be that.
Right? The one, and I see it all the time on social media. And God, listen, God bless social media. It's phenomenal. If you've been trading for 2 years, you have absolutely nothing to go back to. You have nothing to back test on because all you've seen is this magic euphoria that was going on for the last 2 years, and now you're just seeing slowly but surely what's realistically happening in the market. And I say this all the time: 25% of your career is a bull market. That's it. Everything else is distribution. You'll have your bearish scenarios, and just to kind of end on this whole China, Greece, the whole unwinding, guys, remember. I traded through the Asian crisis in 1998 and 99. That shit was a disaster, okay? I traded through 9/11, which was a disaster, okay? Which I didn't make money from 2001 to 2003, okay? Yeah. And 2007 was the financial holocaust, okay? So forgive me if I'm not overly dramatic of what's going on now. This is going to survive. Every period of the market is going to survive. The question is, are you going to shoot yourself in the foot? That's all it is. Are you going to shoot yourself in the foot, or are you going to be responsible enough to trade the process, whatever it is, trade cash flow, book, get your ducks in a row, and learn to sleep and learn to fight another day?
No doubt. All right. Well, you rolled into pretty much what we were going to talk about for the majority of the broadcast here. We're going to talk about price action here. So and by the way, whenever Dan throws out, God bless social media, secretly under his breath, he's like, I hate this shit. I hate this shit so much.
Let me tell you what. Look, I'll be honest. Anybody who lives in New York City in the tri-state area, okay, it's a very, very small street. Yeah. That means everybody knows each other. Okay.
Yep. Surprisingly, too, such a big area and for so many people, everybody knows each other.
Everybody knows each other. Okay. You cannot run into a person like like I live in New Jersey. In New Jersey, where I live, there's a Lifetime Fitness, and on Lifetime Fitness, you have a lot of social media celebrities that belong there. You have Joe Kernan there. You have Scott Redler there. You have you have a lot of people I run into in the gym. So the most important part of what social media is, it's phenomenal. Okay, you want to make yourself taller. You want to make yourself better looking. It is. It's the place to be. But if you're a professional trader and you've been doing this for a very, very long time, I am telling you this as the day is long. This is the most painful thing you will possibly go through. Okay. Right. And once the pain goes away and you stop passing kidney stones and sleepless nights and thoughts of suicide and finally get your ducks in a row, that's when you're born as a trader. It's like the analogy of vampires, right? I love vampires. I love these Anne Rice novels. I love all these all these different things. And what happens is you die, right? You die as a human being, and you're born as a vampire, and that's where your new life takes course. Same thing with trading. You die. Everybody dies. You cannot go into this business thinking you will not die. You are going to die. The question is, are you going to kill yourself? And again, just before we go on, one thing that I want to clear up. Okay, there's a perception in the market that says every single day is an opportunity. Okay, let me make this perfectly clear for anybody who's been trading for less than 2 years. Okay, the market's job is not to feed you. I don't care how much of a nice person you are. Right. I don't care how great you are to your kids. It doesn't matter. This is the only business in the world, and I've said this a million times, that it doesn't matter how hard you want it. It doesn't matter how many charts you look at. You're either going to get it or you're not going to get it. It's just that simple. So there's nothing that another human being can show you realistically, okay, and sell you on some sort of, God bless social media, dream, okay, that you cannot afford to kind of discover for yourself. So the ramifications of trading for a living is very, very misguided. Okay, but again, that's why I believe putting ourselves in a situation like guys like Sang Lucci, guys like myself, guys that you guys don't even know. It's the reality is very, very difficult. The finished product what you see before you was literally not taking a check for 2 years, from 2001, 2003. Contemplating, taking myself out, and that's the truth. When you go,
yeah, and to add on to Dan's story, I mean, I was in the same boat. First 2 years didn't take a check for the first 2 years of my trading, and there were so many ups and downs at the firm that I was at that I wasn't even allowed to take some of the risks that I wanted to and all that kind of stuff. So to Dan's point here about needing to reinvent yourself, that can only happen after you finally realize how full of shit a lot of the stuff that you see on social media is, and a lot of the desires and emotions that you yourself bring upon the market or bring with you to when you sit down to trade the market. And then all of a sudden, these emotions just dissipate by the end of the day, and you're left with your dick in your hand and nothing else, basically.
That's the truth. I mean, it's the truth. I mean, again, if you have never, put it this way, again, if you're still waking up Saturday morning and you're saying to yourself, is it Monday yet? You've never made money. It's true. I've never in my life woken up on a weekend and said, oh my God, I can't wait for Monday. I hate Sunday nights more than anything itself. There's nobody that's ever made any type of money, any type of real money, has ever waiting for Monday to come around. I'm sorry, it's the truth, guys.
All right. So let's get into price action. So one of the things that I really wanted to talk about with you was your assessment of the price action thus far. And obviously we know we just went through a giant bull market cycle where, the euphoria was out there on Twitter. Everybody was making money hands over fist, just buying all these high flyer names every single day. And now we get into a market period where things definitely change. Things have definitely changed. We get into this sort of choppy distribution sort of period. What can you say about the price action that you're seeing now, and how has that sort of affected a lot of trading strategies out there, do you think?
Well, here's the deal. Number one, everybody knows about summer trading, right?
Yes.
Yeah, everybody's gone. I mean, everybody's gone. Like I'm one of the for all you guys who still use AOL Instant Messenger, which is a goddamn dinosaur, but all these old farts like me, we still use it. Everybody's still on AIM. Out of the 60 traders that I speak to throughout the year, maybe 25 are trading right now. So everybody's gone. Okay. So for the summer season, you have to expect lower volume, tighter ranges. Here's the problem. Here's the problem what I'm seeing. And let's take all this news out of the way. Okay, let's just take it all out of the way. What I'm seeing is kind of what's affecting me, and I talk about this in the live webinar every single day. Liquidity for me is a big problem. Okay, because what's happening is the margins, your spreads are wider. Okay, so for example, this morning I was trading Wynn Resorts on the opening range low. And it was literally trading 107 by 107.45.
Yeah, which is a ridiculous spread for Wynn in the first place.
Which is insane.
Yeah.
My whole thing is, and again, it all goes back to the whole pivots and all that thing. On the downside, I need to hit bids.
Right.
Okay. So if I have one of these SSRs, which I can't trade because on an uptick it will destroy me. If I get any type of size, I'll get run over. So for me, hitting bids is a very big deal.
Right.
The ECM thing is irrelevant. I'm not gonna give up on a trade because the ECM fees are high.
Right.
But the fact that there's no liquidity, okay, it's really starting to weigh on me because I'm getting a whole bunch of partial fills.
Yep.
A whole bunch of partial fills. Because if you look at the chart on Wynn today, the first hour, okay, it went from 107.14 to 106, whatever it was, 106.30, 106.20.
Yep.
It got down there literally in about 45 seconds, and I literally got an eighth of my position.
Right.
There's just no liquidity for me to hit.
Right.
Now, the problem with that is there's a lot of problems. Number one, nobody is if you're on the long bias, nobody's there to defend your bid. Number one. Number two, the snapbacks are incredibly aggressive because it's phenomenal. I've never seen such aggressive snapbacks. And you really have to, you really have to respect the ranges. You really do, because if one legitimate buyer or seller comes in, then those thin margins become an incredibly big problem for you because you're automatically on the wrong side of the trade. What I think is going to happen for the rest of the summer, eventually, I think whatever the news is, Greece is going to get done within the next week or so. That's going to get out of the way. Eventually, Eventually, you know, I don't even know if Puerto Rico is still around. Great place. I go to Puerto Rico all the time. Great place.
Puerto Rico is amazing. It is an amazing place. So they have debt issues right now. For anybody who doesn't know, they have some debt issues right now that they're talking about raising some taxes here to cover. They're also trying to apply for some kind of status for the U.S. that they could declare, I don't know, some kind of bankruptcy or, you know, somehow solve their debt issues. So that could be a stone, but it's minimal at best.
Yeah, I think, you know, I don't think they get bailed out because, again, the United States is not in the business of bailing out. That's why Detroit went under, all these one of the major cities in Ohio went bankrupt. So they're not going to bail out Puerto Rico.
Right.
You know, Paulson's going to come in there. He's going to build the whole, you know, whole resort over there for himself, compound. It's not going to go there. It's not going to go there. But I think we're kind of losing track here. But I think what's going to happen is eventually, when all this thing goes away, the market is set up to kind of digest everything. Okay.
Right.
Somebody asked me a long time ago in 2013 when we bought them. Somebody asked me, "Well, Dan, what's going to make the market go up?" Eventually, people get comfortable, whether it's at the top of the range or the bottom of the range. And when bad news gets completely brushed off and gets digested and gets absorbed, stocks start going higher. Right. When good news eventually starts getting, you know, it's good, but it's not great.
Right.
Things start going down. So eventually, technical analysis. Again, you might not be a technical guy, but eventually technical analysis comes into play. Now, yesterday we talked about 2056 before yesterday's whole fiasco.
Right.
2056 to the downside, 2083 to the upside. We tested both areas.
We tested both areas in the same day, and I think twice we did.
Twice.
Yep.
So once things start calming down, because again, the market's never as good as you think. The market's never as bad as you think. Somewhere in between lies an organic, and again, I use the word organic, boring, lethargic market, and that's what you want. You don't want a sexy market. You don't want an exciting market. You don't want a market that's going to compromise stocks, because I see it all the time. I'm buying little shares in this. What the hell's the point of buying little shares? You can make little money if you're right. Well, if I'm wrong, I'm going to lose little money. But what's the point of buying a small position if you're going to make small money? And once that kind of moves away and you start getting an organic move in equities, that's when I think things will start moving, gradually start moving. And again, whether they go up or down is a different story. It doesn't make a difference to me, but eventually they'll start being, you know, more like the way they should be acting instead of the craziness that you see this. And I said it yesterday, everybody loves the idea of volatility until things get volatile, and then nobody wants it.
It's a good point. It's a good point. I mean, even prop traders, I would say for the prop traders of old, you know, like the places of the world that Dan and I came from, more so Dan than myself. I mean, we were very quick scalpers, you know, extremely quick scalpers who when this volatility did come, you know, we were probably one of the only groups of people that were really making money. I wanted to ask you, for this particular market, with this particular price action, what strategies are just getting run over right now? I mean, what's just not working, and what do you see that's just going to die? Let
me tell you what's not working. There's a belief out there, and again, no offense to anybody. God bless you. You're on social media. You want to stop the planet. God bless you. It's all. There's nothing to do with me. There's nothing you can do that's going to jeopardize my trade. Forget about anything else. Jeopardize my trade. But here's the deal. Chart patterns become obsolete. They do.
Yes. I agree with that.
What worked 5 years ago doesn't work now. Everybody asks me, are you doing the Russell rebalancing? Man, the Russell rebalancing hasn't worked in a decade. Okay? It doesn't work anymore. And everybody wants to buy breakouts, right? That's the whole thing. I buy breakout. This one's a breakout. Okay, what happens when there's no breakout? What do you do? Well, you got to sit on your hands. Because
and by the way, this hits my guys tenfold because they're playing the options of the breakout. You know what I'm saying? So when you're sitting there playing a breakout with equities, you know, you might have a little better chance here of stopping yourself out when there's no breakout with minimal loss. When you're in the options and let's say you missing out or whatever, your option is worthless. It's fucking worthless.
Worthless. So I think chart patterns they become irrelevant. You know, everybody knows the whole cup and handle breakout, and
right.
But eventually, you know, again, the renaissance of the modern trader, and this is a very important point that shouldn't be neglected. The modern renaissance that we've been seeing the last several years. Forget about the high frequency stuff. There's 20,000 stocks out there. Okay, I think there's 19,900 stocks that move every single day. 100 of them are going to be tradable. Okay, out of that 100, 5% of that are going to fall into your specific strategy. I don't care what kind of trader you are.
It's a good way to look at it.
5% of that, right? 5% are going to fall into your specific strategy. And out of that 5%, it's your job to identify 3 out of those 5. If you trade 3 out of those 5 properly, you're fine. Okay?
Right.
So the idea of a tradable market is, I think, a thing of the past. I think what's happening is there's stocks that are moving, and then there's very few stocks that are tradable. And I think the renaissance, right, that we've seen in the last couple of years of this magnificent bull market, this rabid unicorn effect that we've seen, is giving traders a lot of false hope, because they believe, well, I can hold on to anything, it'll bounce back. The reality is, once they make that initial move, and the manufactured volume that comes in, majority of stocks, they hold the bag, and it becomes another generation of revolving traders going through the revolving door.
Exactly.
It's a new tape. It's a new tape. I've traded. I started trading 24, 25. I'm trading now completely different than I was. Up to 2 months ago, every day I used to trade SPYs, IWM, SPYs, IWM. I haven't touched them in 2 months because there's too much. I can't be a slave to the headline. I can't be a slave to every single high-frequency robot that decides to wake up and destroy me. It's
those
true.
good old buy and sell programs.
I can't trade these. Like I tweeted out, and I've been trading. I've been trying to tweet out these pivots for the last couple of months because I want to show everybody what the potential of something that I found by accident, about a year ago. And I've been tweeting out these pivots well ahead of the price action because I wanted to get intelligent dialect going. Dan, why is this happening? What are you seeing the majority of people are not seeing? Because a lot of times people think that normal is what everybody's doing.
Right.
And my response to that is, well, if 90% of the people are losing money, why would you think that's normal?
Right.
You know what I'm saying? Like, why would you think that's normal?
Right.
And there is no answer to that because unless somebody shows you something, unless somebody sits you down and say, hey, you know what, you might want to check this out. It's like somebody, it's like me putting my 8-year-old son in the car and say, hey, go drive it.
Right.
You're going to kill yourself. I mean, you're literally going to kill yourself. So it's very, very important that the modern trader, and again, you could be an aspiring trader, whatever the case may be, that the modern trader gets really all the information, not the social media information, really get all the information that they can substantially put themselves in a situation for longevity. Right. And no trade is more important than the process. And it's kind of I want to kind
of and that coincidentally this rolls into our last piece here. I mean, Dan alluded to the fact that you need to sort of reinvent yourself and figure out how you're going to go about this game career-wise, longevity-wise, and everything. So Dan himself and myself have tailored back on a lot of the ego that we used to have and all those kind of crazy trades that we used to make. I would say him more so than me. I'm still working my way out of it. But through all this, Dan has something that he wants to sort of roll out here for you guys, the sort of thing that he's been working on, and how he sort of stays sane in the markets, clips his little money here and there, and has this sort of peace in mind as you go into the weekend here and just forgetting here about most of the headlines and all that kind of mumbo jumbo that most traders sort of they just consume themselves with, and they need the tick. They need every single tick. They need to see it. They need the markets to be open. They need it just to push all their emotions out onto. And Dan has sort of created something a little bit outside the box here that he wants to go ahead and introduce for you today. Talk to us a little bit about that.
Yeah, I think every trader, from the time that you first open up your brokerage account, you're kind of in this mode, and you kind of read all these books and you kind of read all these articles about what works, the Warren Buffett way, the Turtle way, the Ninja Turtle way, all those. But you try to find something that works, and every single trader, as you go the process of your career, remember, every single trader has different account sizes, different thresholds, all that good stuff, right? Tolerance, risk tolerance. And you usually find your greatest discoveries as a professional trader when you go through a downdraft.
Yes.
And about a year ago, I'm always trying to perfect things. And about a year ago, I went like 3 days, and I just couldn't make any money. I just couldn't make any money in those 3 days. And I started when I can't get anything going or have a bad day, I start looking at a lot of charts. And I stumbled onto something by accident, a pure accident. And every single strategy that I've ever created and whatever has been by pure accident. And I started looking at charts, and about a year ago, I started looking at pivots. And pivots by themselves are irrelevant. What's a pivot? Pivot is a potential directional shift, right?
Right.
Up to down to down to up. Okay.
Right.
So pivots by themselves are kind of irrelevant. If $200 on the SPYs is the pivot, it might go up or it might not go up. We don't know.
Right.
But what I found was pivots combined with supply and demand zones confirmed on a 60-minute channel. Now here's kind of where it shifts a little bit. The normal, right, when you're a quote-unquote trader and you trade for cash flow, and this is, again, cash flow. This is not about swing trading. This is about cash flow.
Right.
When you talk about cash flow, you're trying to get in, get out, trying to get your money, cash flow, band-aid your days together, and get the hell out of Dodge. So you're taught as a trader, especially on social media, that if you look at the 1-minute chart, that's the play. Break out in the 1 minute. Here's the problem. The 1-minute chart is giving you all the macro action on the 1-minute chart. So everybody that has a $2,000 account, everybody has a $500 account, everybody that has no tolerance in the market, small accounts, small education, all that good stuff, lack of pain tolerance, they're in that 1-minute channel. Okay?
Yep.
Within that 1-minute channel, you can't be right now, you have to be right 5 seconds ago, because what happens is there's another minute that goes by and there's another candle. And in that minute, you get new players that join. You get more of these new players. You get more of the high frequencies. You get more of the fund managers positioning. You get more of these alert services. Oh, this one's going to go. That one's going to go. Okay, great. So you have to be perfect within that one minute. Now here's the deal. Okay, all these years, everybody's telling us that the 1 minute is perfect. The 1 minute it was worked. So here's my question to you. Okay, would you rather watch 390 1-minute channels or watch 6-minute candles throughout the day? It's a very simplistic strategy, because within those 60 minutes, you have all these guys stopping themselves out, these 1-minute traders, hell, the 5-minute traders, the 15-minute traders, whatever the case may be, and they're stopping themselves constantly. Constantly. You could have 2 traders sitting next to each other. They'll both be wrong on the same trade within that 1 minute.
Yep.
Okay? Within that 1 minute, because you'll get stopped out. Well, I can't take it. I'm out. Within that 60-minute cycle, okay, if it confirms a supply or demand move, okay, within a pivot, it's giving, and again, everybody in our live webinar will attest to this, it's been giving just tremendous cash flow. And everything, like I traded today primarily all on the short side, just very quick scalps today, a bunch of opening ranges. But this has been my most, in my opinion, this has been the greatest discovery for me for the last 16 years.
Nice.
If somebody else showed me this, I would have thought this was phenomenal. The fact that I'm the biggest idiot on the planet and I stay claim to that channel, I still can't believe that I have something here. And the greatest part about it is I still think I'm still in the first inning. Excuse me.
Right. First inning, you saying of figuring it all out.
I still think I'm in the first inning of actually developing this, but I'm pretty excited about it. I've gotten just a lot of great feedback about it, and I just don't think there's anything like it. And again, it might not be for everybody, because if you don't trade cash flow, it's really not for you. And if you're buying TNT for 3 years, it's irrelevant. But it's something I've been working on for a year. We've been practicing this religiously every single day, and it works damn well. And that's why I've been kind of tweeting out these pivots well before the price action, because I want you guys to kind of start thinking, what the hell is he talking about? When he asks the follow-up questions, and is this right for me? And the last kind of pivot that we saw this flush out was this last trade that I think I threw out on social media, was this catching a knife on SPYs on this 204 60s area. It hit the 204 60s, a little bit more aggressive, and around like the 205 20s. But again, that's part of catching a knife on demand that is met with a 60-minute bar. And if you guys see what I was talking about, it'd be much more clear. But I'm pretty excited about it. And again, I've teamed up the guys at Sang Lucci group, Pete and Charlie and Lucci himself, and we got some cool stuff. We definitely got some cool stuff lined up. in the future, we're going to try to get a lot of our friends. I know I got a lot of feedback of everybody wanted to see Meyer, and everybody saw Meyer, and I run with a pretty significant crew, and we're going to try to do some more live events down the road. But we got some good stuff coming up.
Definitely, and guys, I can speak to that. And anybody who has any questions, you know how to hit up. How can they find you? First of all, on Twitter, what's your handle? You're at Dan Shep.
Yeah, Dan Shep 55.
At Dan Shep 55. Ask him any questions that you guys might have. What we're going to do is we're going to explore together this particular strategy through various different ways. So stay tuned here. Check the Sang Lucci Twitter feed as well as Dan's, and we'll definitely be rolling some things out to you pretty soon, man. Any last words you wanna leave these guys with? Any last tidbits of wisdom here, Dan?
God bless America.
God bless America.
You're going to need it, because we're going to go down 1,000 handles tomorrow, or we're going to be up 1,000 handles. Either way, God bless you all.
And God bless social media too. Everybody on social media.
God bless social media.
Posting your calls and front running people. God bless it all.
Everybody.
All right, and with that, man, Dan, thank you for joining us, man, and we will see you soon, man. We'll probably get you back around on another episode of SLTV. But guys, again, stay tuned on the Twitter feeds and check out for what's next.
All right, guys, have a great night, everybody.